Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with your European session outlook. And we'll start with the North American markets. The dollar weakened against the yen, pound, and a host of other rivals on Friday as investors bet an outstanding June jobs number released earlier in the day wouldn't be enough to convince the Fed to raise interest rates this year. The greenback shed 2.1% of its value over the past week, its largest weekly drop in 2. While the headline numbers still helped to allay fears about faltering U.S. economic growth, investors will likely wait to see if strong jobs growth continues in July before revisiting their expectations for the pace of interest rate hikes. We have the unemployment rate and NFP on Friday as mentioned. Unemployment rate 0.1% worse than expected at 4.9%. And NFP is at 287,000. The average weekly hours were as expected at 34.4. Labor force participation rate 0.1% higher than previous at 62.7%. Consumer credit change $2.56 billion better than expected at 18.56 billion. And in Canada, the net change in employment 5.7 thousand worse than expected at negative 0.7 thousand. And the unemployment rate in Canada 0.2% better than expected at 7%. Participation rate in Canada 0.2% less than previous at 65.5%. The Dow Jones 23 points up Friday. Nasdaq ended 65 points up. The Dixie is at 96.44 this morning. And today's events will be only a couple. The housing starts seasonally adjusted year on year from Canada and the labor market conditions index from the U.S. For the week, most important events are on Friday in the U.S., the retail sales month on month, and in Canada, the interest rate decision, press conference, rate statement, and monetary policy reports. All right, on to the European markets. European stocks swung higher Friday with added lift from an upbeat U.S. jobs report that helped financial shares advance after their tough week. In Frankfurt, the DAX 30 pushed up 2.2% to 9,629, and France's CAC 40 rose to 1.8%. Bank of Italy Governor Ignazio Visco said Friday that state intervention may be needed to prevent the problems afflicting Italy's weakest banks from spreading to other lenders. The European Commission has repeatedly said this week that the EU executive body was in contact with Italian authorities about options to strengthen the finances of the Italian banking system using measures compliant with European rules. In the short term, a bailout of the Italian banking sector will probably be a positive development, or at least a less negative one. But overall, the Brexit fears remain the key issue for the euro. The Euro USD had a range of 120 pips, ending slightly lower on Friday. All right, on to the UK markets. We had some news. Industrial production month on month, 0.5% better than expected at negative 0.5%. Industrial production year on year, 0.9% better than expected at 1.4%. Manufacturing production month on month, 0.5% better than expected at negative 0.5%. And manufacturing production year on year, 1% better than expected at 1.7%. We also had the NIESR GDP estimate, 0.1% better than previous at 0.6%. With traditional political parties in chaos, no clear leadership, and an economic and monetary climate in free fall, many have seen Mark Carney and the Bank of England as the only remaining pillar of stability in the UK. This is why investors will be watching closely the measures of the Bank of England will undertake and announce in their first meeting after the UK voted to split from the EU. Expectations are for the MPC to vote for an interest rate cut. An increase in the asset purchasing facility is also on the table. If an interest rate cut is announced, we can expect the sterling to continue its downslide to fresh lows. Meanwhile, George Osborne has embarked on a 2-week tour across the US, China, and Singapore, where he will aim to persuade investors that the UK economy and financial markets are in good shape despite the Brexit vote. The FTSE 100 gained 75 points and closed at 6,541 on Friday. The events for the week are the Bank of England Super Thursday, the BRC Retail Sales Monitor, Bank of England Quarterly Bulletin, RICS Housing Price Balance, and CD Leading in the Economic Index. Alright, on to the Asian markets. A lot of news from Japan. Japan's ruling Liberal Democratic Party won a major victory during the House of Councillors election this past weekend, as they secured 70 of the 121 seats available in the upper house. The election has paved the way for fiscal policy reform as the economy becomes a point of contention for Japan's voters. One of the biggest fiscal measures being considered is a supplemental budget said to be as large as 5 trillion yen and would extend to a number of social and public work projects. Heading into the elections, the Abe win was seen as likely be paired with an increase in the Bank of Japan's monetary stimulus operations, which continue to push borrowing costs lower with negative interest rates. The recent elections and the supportive supermajority now appears likely to make these initiatives more forward, more smoothly if they indeed take place. In his speech today, the Japanese Prime Minister pledged to take broad and bold actions and take the economic steps required to encourage future investment while making the most of the zero interest rate environment. Abe confirmed that he will instruct Economic Minister Ishihara tomorrow to compile a stimulus package to support domestic demand, while commenting that measures will attempt to speed up exit from deflation as quickly as possible. The Japanese Prime Minister also emphasized that he will push for more labor market reforms. The call for increased fiscal stimulus has come in the wake of recent yen appreciation, as the effect of monetary policy appears to fade in the open markets. The election win, combined with Friday's US NFPs and the speech by Abe, saw a positive reaction by risk sentiment, with the Nikkei 225 rising alongside the S&P 500 futures, while the yen saw weakness as the details of the speech hit the wires. And the last sector for the day, commodities. The Baker Hughes oil rig count increased by 10 last week to 351, marking the 5th increase in 6 weeks. Gold had a range of $35 at $13.66 now. Silver had a range of $1.10 up to $20.53. Crude oil has $1.20 range at $45.14 now, and natural gas is trading at $2.82 at the moment with a range of 7 cents. And that was all for the outlook today. Thank you for the attention, and I'll see you next time. Goodbye.